Hey, Wales, good morning. Happy Monday. Let's go over Tesla and recap the markets for today's trading session. All right, so with that said, let's dive in. So before I go into Tesla, guys, I want to first take a look at the S&P 500. It provides a very clear picture here in terms of what's going on. We did reach a top, right? We're looking for a 1-2 for a wave down. ABC, still working on this C leg, right, for a WX. So we'll possibly get that bounce, a 10% bounce towards the upside. So that'll most likely last a few weeks before one more flush towards the downside between 377 and 450, guys. Okay, so that's sort of my main target for the S&P 500. Typically, when you get this wave one coming down, wave twos like to end around the 618 down to the 786 Fibonacci levels for potential reversal. Okay. So this is sort of the roadmap that I'm looking at, right? I do think we still have a few more waves to go down before maybe a multi-week bounce. Let's see, right? So with that said, I'm also taking a look at other ETFs. So for instance, the energy sector, um, you can clearly see we're still in a bearish cycle, and it's starting a bearish cycle 1, 2, 3, 4, 5 for wave one, and then we broke this trend line. So we're looking for more downsides on a lot of these ETFs, right? Whether it's energy, oil, financials, everything is starting a downtrend. So for our group, and we don't like to buy downtrending stocks or downtrending ETFs. We always go with the trend. So we short, and we make sure that we make money that way, right? So again, XLE, companies like or ETFs like XLF, right, broke that trend line. So we're starting a bearish cycle as well. So we don't like catching falling knives, guys, right? Even if you take a look at crude oil, this is a very big indicator that the markets are about to, see some bigger pain into the future, right? We're breaking some multi-year lows, guys, right? A base formation here. And you can see that the one-to-one equal lengths would take oil down to $28, right? So we're timing the markets, guys, on potential reversals with other ETFs to make sure that we don't catch a falling knife, right? So we'd like to go with the trend. Now, if I dive deeper into Tesla here, if we're expecting more downside um, on futures and the S&P 500, this low at 217 will most likely be broken, right? So we're looking at possibly 175 down to 103 for that landing zone for Tesla. Now, if this does bounce and sort of times it with this bounce, this WX wave, right, on the S&P, we're looking for something like this before more downside on Tesla, or it can surprise us, hold a higher low, and actually push up, okay? So either or, a lot of these cycles are bearish right now. As a trader, for me and my group, we do not catch falling knives, guys. All right. We don't try to catch where that bottom will be. What we typically like to do, all right, is this, guys. When the lows are formed, okay, and we keep going on this downtrend, we do not buy the falling knife, right? We like to wait for accumulation, sideways movement, and then when it starts uptrending again, we buy the dips on uptrends, right? So we're waiting for a lot of stocks, right? We're shorting mostly energy and oil right now, right? But we're going to be going into, companies like Meta, Amazon once it starts uptrending again. Right now, it's pretty shaky, guys, right? So just for us, we're just relaxing. We're just making sure that we're protecting our capital. Have a great rest of your Monday.